So we can now see that price returned into this fair value gap. So if you've been following our weekly Forex forecast, you understand I've been emphasizing about the mean threshold, or what we call the consequence encroachment. So you can see how price mitigated the consequence encroachment, and then we have price fell to the downside. So meaning now the market is actually aiming to take out this sell side liquidity. So this is now our next target. We want to see the market drops to the downside to take out this sell side liquidity. So let's play price to see. So we can see the market is moving. So you can see that this was actually the movement price made on Monday. Now we are in a new day, which is actually Tuesday. So since we're in the Tuesday market movement right now, so we'll actually play price to see what we should possibly expect. The possibility is that the market may return to take out this. Hello traders, welcome to the Nexoel Trading Hub YouTube channel. In this video, we are going to be looking at top-down analysis and trade execution using the smart money concept. The best you can do for yourself is to not skip any part of this lesson so that you can actually be able to comprehend the concept and be able to replicate the concept in your analysis and also in your trade execution. So guys, let's head to the charts. So this is the Euro USD and this is the weekly time frame. So we're going to actually look at top-down analysis using the smart money concepts. And what we can actually identify is that we can see that the market is actually giving us a bullish momentum to the upside. If you can remember, I always make this emphasis to make us understand that the market actually involved to fulfill three things in the market: to take out external range liquidity, return to fuel inefficiency, and also take out internal range liquidity. So where is actually our drawn liquidity? Meaning we have this buy side liquidity resting here. So the market is being attracted to this buy side liquidity. So we are expecting to see that we have further bullish move of price to the upside to come raid this buy side liquidity. Because we can see this is a swing high that sponsored the bearish movement to the downside that took out this sell side liquidity and also this sell side liquidity. So this is our range from this high to this low. And within the range, we can see that the market took out this buy side liquidity. So we have a run on this internal buy side liquidity. And what we can see is that the market is actually reacting at this weekly order block. So we can see that the market is reacting at this weekly order block here. So we've identified the order block in the weekly time frame. What we can see is that the market is reacting at the mean threshold of the order block. So we can see that this is the rejection block that sponsored this bearish move that took out this sell side liquidity and also this sell side liquidity. And now we can see we had the bullish move to the upside that took out the buy side liquidity. So whenever we see that a sponsorship candle is violated, we'll look forward to see that that sponsorship candle is going to actually reclaim price. And that is what we're anticipating to see, that this rejection block is actually going to reclaim price before we actually have further push of price to the upside to come take out the buy side liquidity. So our anticipation is to see that price will dip lower since we have price reacting at the weekly order block. So we're looking forward to a bearish move to the downside before we can frame any form of a bullish move to the upside. So since we've actually identified and mapped out our zone in the weekly time frame, now we can now drop to the daily time frame. So here in the daily time frame, what we can actually identify is basically the same thing we saw in the weekly time frame. So you can see within the weekly time frame order block, we have this fair value gap. So the market has actually mitigated the fair value gap, reacting at the order block in the daily time frame. So we are anticipating to see the push of price to the downside because price took out this order block, took out this buy side liquidity. So we want to see this order block in the daily time frame, which is actually a rejection block in the weekly, reclaim price before we have the push of price to the upside, because the market has taken out this internal range liquidity. So we want to see a pullback before we have a continuation to the upside. So what we can see is we have this fair value gap in the daily time frame. So this fair value gap has been violated to the upside because we have order block. So the anticipation is to see price return to the order block and then fall to the downside. But what we can see is that price broke through the order block. So we have this inversion fair value gap in the daily time frame. So let's identify that. Let's mark out the inversion fair value gap. And you can see it's in confluence to the weekly rejection block zone we identified. So now this is our inversion fair value gap in the daily time frame. So you can see this is our level where we identify the rejection block in the weekly time frame. So you can also see in confluence to the inversion fair value gap, we have this fair value gap in the daily time frame. So we're anticipating to see that price would dip more lower to the downside before we have the push of price to the upside. And price may dip more further into the order block. So we can see that the rejection blocks will identify in the weekly time frame. In the daily time frame, we can see we have this institutional order flow, the sell move before the bullish move to the upside. So we want to see price drop to the downside before we frame a bullish move. So we'll be looking to take sell entries from this order block to the downside. So let's actually drop to the 4-hour time frame to identify our sell side liquidity that we're anticipating to see the market will return to take out the sell side liquidity and mitigate this zone. We have this sell side liquidity here from the daily time frame, but for better identification, let's drop to the 4-hour time frame. So here in the 4-hour time frame, so we can identify our sell side liquidity. So we have this low as our sell side liquidity. So we're anticipating to see that the market will come raid this sell side liquidity. And you can also see that we also have another sell side liquidity resting here above the zone we're anticipating to take our profits from. So we also identify that sell side liquidity. So what we are expecting is to see bearish move of price to the downside. We want to see price take out the sell side liquidity, in extension this sell side liquidity, and then we'll see price face mitigation from this zone, and we can begin to frame a bullish move to the upside. But in the course of this lesson, we're going to pay attention to the bearish move. So now what we can see is that we do not have a break of structure here in the 4-hour time frame. What we have is buy side liquidity sweep. So we have a sweep on this buy side liquidity here in the 4-hour time frame. So we are expecting to see that the market will push further to the downside to take out the sell side liquidity. So let's go to the 15-minute time frame. This is the 15-minute time frame, and you can see the sell side liquidity swing points we actually identified from the 4-hour time frame, and this is our weekly rejection block zone. So we're anticipating to see bearish move of price to the downside into this rejection block zone, because we can also identify that in the 15-minute time frame, we can see we also have this unmitigated institutional order flow. We have inefficiencies resting here, fair value gaps. So this is actually the buy side liquidity sweep identified from the 4-hour time frame, but what you can see, it's basically more of a break of structure. So that is why you need to understand the higher time frame price delivery, so that when you drop to the lower time frame, you won't really get confused. So now what we are anticipating to see is to see a bearish move to the downside. Since the market took out the swing high points, price left inefficiency. So we are expecting to see the return of price to take out the sell side liquidity, fill up the inefficiency. Then possibly we could see rejection, pull back to the upside before the market further falls to the downside to take out our sell side liquidity based on the zones identified in the higher time frame. So now we know that the price is actually reacting at the weekly order block. So let's actually play price to see. This is actually our first sell side liquidity targets. So let's play price to see what happens. So now we can see that the market is actually basically ranging. Now the market is open and we can see that the market is ranging. So this is actually last week high points. So let's actually mark out the high point. So we're expecting to see that the market would actually take the buy side liquidity resting here before we see push to the downside. Because if you understand the power of 3, we're going to have accumulation, and then we have the manipulation, and then we'll see what's the distribution to the downside. So I'll be looking forward to see that the market is actually going to push to the upside to take out last week buy side liquidity before we begin to frame the bearish move of price to the downside. Let's play price to see. Okay, so we can actually see that the markets took out the buy side liquidity. So now, since the market actually took out the buy side liquidity, so what we're expecting is to see displacement to the downside, and then we want to see inefficiency, and then we'll begin to frame our entry from the inefficiency. So basically, this is actually the Asian range, and then the market has given us the accumulation. Now we have the manipulation. So we're expecting to see the distribution. So let's play price to see. So what we can see is that now we have the push of price to the downside. So what you can see is that the market took out this buy side liquidity, and then basically now what we have is we have this pool of sell side liquidity resting here. So we want to see the market takes out this pool of liquidity. So you can see we have the manipulation. Price fell to the downside, give us this impulsive move to the downside. So let's play price again to see. So we can see that now the markets fell to the downside, and what we have is this pool of liquidities resting here. So we have the displacement to the downside. So the market left a fair value gap here. So we can see this is actually our fair value gap. Our expectation is to see the return of price into the fair value gap, and then we have the market falls to the downside. But what you can actually see is that in confluence of the fair value gap, we have the breakout block, because we can see this actually took out this buy side liquidity before the fall of price to the downside. So I'll be expecting to take my entry from the mean threshold of the fair value gap, my stop loss above the high, and then I'll be targeting to actually take my profits at this swing low for my first take profit region. But you know, in extension, we want to see that the market will take out this sell side liquidity and also this other sell side liquidity. But we want to actually begin to frame our setups gradually. So this is the first take profit. So I'll be targeting the first take profit region. I want to see the market takes out this sell side liquidity. So let's play price to see. So now you can see that the market has already triggered our entry. So we can see that the market triggered the entry. And now we can see that the market is falling to the downside. So let's continue playing price to see what happens. So now we can see that the market is actually ranging to the downside. So what you can actually identify here is that when the market took out this liquidity pool resting here, you can see that the market returned into this inefficiency that price created here, and then we had continuation. So price took out this sell side liquidity, price created buy side liquidity, we have inefficiency, price returned took out the buy side liquidity into the inefficiency. So let's play price further to see. So the market is still here to take out this sell side liquidity. So let's keep playing price to see what happens. Now, what you can see is that the market took out the sell side liquidity. So meaning we've actually made our profits from this particular price movement to the downside. So let's keep playing price further so that you can actually identify regions where you should have actually taken your position. So now, since the market have actually taken out this sell side liquidity, so basically we have a run on this sell side liquidity. So the market has taken out this sell side liquidity to the downside. So we are expecting to see that the market is actually going to pull back. So what we must identify is the inefficiency within this leg move that sponsored the movement to the downside that took out this sell side liquidity. So what we can see here is that all form of inefficiency here have actually been mitigated. This is actually the only region where we have inefficiency. This is where we have the fair value gap. So be looking forward to the possibility of price returning into this fair value gap, and then we have further continuation to the downside. So let's play price to see. So we can now see that price return into this fair value gap. So if you've been following our weekly Forex forecast, you understand I've been emphasizing about the mean threshold, or what we call the consequent encroachment. So you can see how price mitigated the consequent encroachment, and then we have price fell to the downside. So meaning now the market is actually aiming to take out this sell side liquidity. So this is now our next target. We want to see the market drops to the downside to take out this sell side liquidity. So let's play price to see. So we can see the market is moving. So you can see that this was actually the movement price made on Monday. Now we are in a new day, which is actually Tuesday. So since we're in the Tuesday markets movement right now, so we would actually play price to see what we should possibly expect. The possibility is that the market may return to take out this buy side liquidity and possibly mitigate this order block before we have further continuation to take out the sell side liquidity. So let's play price to see. We can see that the market is actually ranging. So we can see that the market returned to the upside, and then we can see that the market took out this buy side liquidity before giving us the bearish move to the downside. So we can see the market took out the sell side liquidity. So you can see that on Tuesday, the market took out this high that market created on Monday, and then we have the fall of price to the downside, took out the sell side liquidity. So we're expecting now to see that the market would continue for the movement to the downside to take out this sell side liquidity, because we've identified our region from the higher time frame that we're looking forward to see the market will take out this sell side liquidity, also this sell side liquidity to this rejection block we identify in the weekly time frame. So you can see the advantage of actually carrying out your analysis from a higher time frame. It helps you determine how far you can hold a position in the lower time frame. So let's play price to see. So the market is still ranging. Wow. So we can see that the market went to the upside. So the market took out this buy side liquidity, took out this buy side liquidity. But that doesn't mean we actually have a change in market character, because we have actually established from a higher time frame that the market is actually reacting at an order block, and we can see price is still leaving this inefficiency unmitigated. So we're expecting to see the mitigation of this inefficiency. So let's play price to see what happens. So we can see the market is ranging, the market is falling back to the downside, and we can see that the market took out this sell side liquidity. So now, since the market took out this sell side liquidity, what we are expecting to see is the return of price into an inefficiency or an unmitigated order flow before we have the continuation of price to the downside. So what we can see is that now, this is actually the order flow that sponsored the movement to the upside that took out this buy side liquidity. So we want to identify the breakout block here, because this actually took out liquidity and then fell to the downside, was violated. So you can see we have this as our breakout block. So we're expecting to see that price would actually return into the breakout block, and then we have the continuation to the downside. So I'll be looking forward to take an entry from the low of the breakout block or the main threshold of the breakout block, and then we have the continuation to the downside. So let's play price to see, because you can also see we have this unmitigated order flow. Now this is the breakout block. Basically, this is the fair value gap close to the region of the breakout block. So price may just fall without necessarily pushing further into the main threshold. But anyway, let's play price to see. Okay, so we can see that the market actually tapped the breakout block and not necessarily into the main threshold, because what we can identify is this is actually the ideal low. And you can see we have this order block here, which is now a breaker. That is why you can see, and this order block is in more confidence to this fair value gaps. So you can see we have the rejection to the downside. So let's further play price to see. Now what we can see is that price is filling up this inefficiency. So let's see how the market falls further to the downside. Okay, so now what we can see is that the market has successfully filled up this inefficiency. And one thing you must understand is, I've always stressed this in the weekly Forex focus video, and whenever we see price fills up inefficiency, we may see pullback into the main threshold of that inefficiency. So let's actually identify this fair value gap that the market has actually filled up. So this is actually the fair value gap that the market has filled up, which is actually now an inversion fair value gap. So we have our inversion fair value gap. So we'll be expecting to see price pulls back to the main threshold, and then we can see the continuation to the downside. If we observe clearly, we can see that the market took out this swing low point, price took out this sell side liquidity. So we can see that the market filled up the fair value gap and also took out the low of the order block. So we're expecting to see pullback. But what we can see is the price created this order block at the main threshold that sponsored the bearish movement of price to the downside. But we can see that slightly above this order block, we have the fair value gap. So we could see the market dip more higher into the fair value gap. So that's the market would actually take out this high as a buy side liquidity. So we have the fair value gap resting there. So we could see further push into the fair value gap. And we can see this is actually the last pullback leg move, and this is unmitigated. So the market may push further to actually mitigate it. And don't forget, this is actually the ideal sell side liquidity we're looking forward to see price takes out, because this is actually the ideal swing low point before the bullish move. So let's play price to actually see. So we can see that the market return took out this buy side liquidity, mitigated this mitigation block because this sponsored this bullish move to the upside before the bearish move to the downside. So let's further play price to see. So the market created relatively equal lows here. So either we see the market push for the fill up this inefficiency here, because we have this fair value gap here. So you can see we have this fair value gap, price created this fair value gap here. So we may look forward to see that the market may reject at this fair value gap and fall to the downside, since we have the market fill up this inefficiency, mitigated this particular institutional order flow. Though this is actually where we have the ideal pullback. So the market may take out this buy side liquidity before continuing to the downside to take out this sell side liquidity. But I could possibly be expecting to take entry at this fair value gap to further push price to the downside. But anyway, let's play price to see. Okay, price actually violated the fair value gap. So we can see that actually the market went further to take out this buy side liquidity. Because if we want to actually identify the pullback, we have this pullback, drop of price, this pullback. Price return created relatively equal lows. So the market may aim for the buy side liquidity before pushing to take out the sell side liquidity. So let's play price to see. Wow, this is an impulsive move. So you can see we have this impulsive move that took out the sell side liquidity resting here. Now what we can see is we have, wow, relatively equal lows here. So we still have a valid reason to see that the market will further push to the downside to take out this sell side liquidity. So this is actually a massive impulsive leg move. So let's actually go to the 4-hour time frame to see how we could possibly anticipate to see an entry here. Or let's go to the 1-hour time frame. So this is the 1-hour time frame. So this is the price delivery. So you can see we have this relatively equal low. So we have more valid reason to anticipate more further bearish move into our inversion fair value gap. So what we can see, we have this fair value gap that price created here. So here in the 1-hour time frame, this is the fair value gap here. So we have this as our fair value gap. And in confluence to the fair value gap, we have this breakout block, because this sponsored the movement that took out this buy side liquidity. So you could see price deep into this fair value gap in confluence with this breakout block, and then we have continuation to the downside. So this is based on the 1-hour time frame, because I said let's actually go further to the 1-hour time frame to actually look at the impulsive move that we saw in the 15-minute time frame. So we may see the return of price to this price level. The price may retest and then further drop to the downside. So let's go back to the 15-minute time frame. So this is a 15-minute time frame. So let's play price to see. We're expecting to see the possibility of further push to the upside. But we can see we're having this rejection candle to the downside. So let's play price to see. Okay. So we can see that price further went to the upside, but not really back to this particular zone we expected. So we can see that price fell. We could see the possibility of further push since we do not have the break of this low. So let's play price to see. So we can see now, that the market dropped further to the downside and has taken out the sell side liquidity. So let's go to the 1-hour time frame. But if I'm expecting more further bearish move, so I'll be expecting to see price react at this order block here, where the market will take out this buy side liquidity and then continue to the downside. So let's play price to see. Okay. The market didn't return. Let's play price further to see. Okay. So the market did return to the order block. So let's actually draw that out. So we can see that the market mitigated the order block. So let's further play price to see. All right. So the market again further pushed to the downside, and then we can see that the market took out this sell side liquidity. So I believe the market has mitigated our inversion fair value gap. So let's check that out from the 4-hour time frame. So this is a 4-hour time frame, and we can see how price neatly delivered to the downside into the zone we actually looked out to take our profits. So now what we can actually see is from the 4-hour time frame, you possibly would not have seen reason to want to take your entry from this price movement to the downside. So that is why you would actually understand the importance also of the lower time frame. It gives you the ability to actually execute your trade earlier. So the possibility of you actually taking entry here would be possibly when you see the rate of this low point. So you expected this pullback in confluence to the inversion fair value gap here. So we saw this pullback, and now you can see the fall of price further to the downside. But you can see in the lower time frame, we had entries even from this region. Why? Because now from the 4-hour time frame, you can see we have this bearish candle to the downside, this engulfing candle. So now we can see the fall of price. So in the coming lesson, we'll actually look at the bullish move. If actually the bullish move took place from this zone, we're going to actually look into that in the coming lesson. So I believe this lesson is actually very beneficial to you. For you to actually understand the concepts, you would really need to backtest your charts, sit with the charts, understand the ideology behind this price movement, and you'll be able to comprehend this lesson. So guys, till I see you guys in the next episode, cheers and God bless you.